and welcome to Magicbricks Now. You are watching Property Hotline with me, Kavita Krishnan. We are answering all your home finance queries today. Our guest in the studio, our expert, is Harsh Roongta. Harsh is a SEBI registered investment advisor. He's also a chartered accountant. Harsh, welcome to the show.
It's a real pleasure, Kavita.
Let's get started. Our first question for the evening comes from Sushil Pal. Now, Sushil has written in through email. He says that he wants to buy a flat in Noida and he wants to know if he can take an interest-bearing loan from his mother. If yes, what is the procedure for the same?
Well, I think the asked question is self-evident. I mean, we are a democracy. You can take an interest-bearing loan from anybody. I think the question really that Sushil is asking is that interest going to be deductible for tax purposes? So the news there is yes, the interest is deductible for tax purposes. You will be able to deduct it. But just remember, your mother will have to pay tax on that interest. So if she has other income, then this interest will be added on to that. Or anyways, this is going to be income in her hands.
So Harsh, let me just get it right over here. What you're saying is that, for instance, I can lend money to someone who is a relative, and I can charge interest on that. And the person can actually get tax exemption on the interest that I'm charging on the loan that I've given the person, though I'm not a bank or a housing finance company.
For the interest portion, that is correct.
Okay.
For the interest portion, you can have taken the loan from anybody. It does not have to be a bank or a housing finance company. For the principal deduction, if you're wanting to claim under Section 88, the principal repayment, that has to be from a bank or a housing finance company. So, as far as the interest deduction is concerned, there is no such restriction. As I said, his mother, Sushil's mother, will have to pay tax on that interest. The documentation is mentioned. There is no real documentation. It can be plain simple a letter which says that I'm giving you so much loan at so much interest, etc. If the property is self-occupied, then I think he should do well to get a certificate from his mother regarding the payment of interest. The format can be whatever a regular bank format is there that he can use, that he has to keep it with his records in case the assessing officer asks for it. Just one word of caution, please don't do this as a tax planning. If you are doing it on a genuine basis, you are genuinely taking a loan from your mother and genuinely paying her interest, just make sure you pay that interest. I don't think there is going to be any problem in claiming it as a deduction.
So Sushil, some things that you need to remember. Yes, you can get tax deduction. You can claim tax deduction on the interest that you're paying your mother, but also remember that if your mother has any other source of income, this will also be considered income. And if it exceeds, it becomes taxable income, if it reaches the taxable limits, then she will have to pay income tax on that. The other thing that you need to remember is that you can only claim deduction on the interest, not on the principal amount. And of course, you will need a letter or a certificate from your mother saying that you are repaying a loan which you've taken from her. You've taken X amount of loan at a certain amount of interest and you're repaying that over so many years. That is something that you will need to have handy to show the officers if they do come knocking on your doors. Moving on, we have a question that comes in through email now from Atul Pawashe. Atul plans to buy a property with a loan of 39 lakh rupees. He has a salary of 80,000 rupees a month. Now, Harsh is looking at a tenure of 15 years. He says he has an existing car loan with a tenure of 5 years. He's paying an EMI of 10,500 rupees monthly for that. He also has other investments like an SBI PPF of 60,000 rupees a year and LIC policies worth 56,000 rupees. He has cash worth 10 lakh rupees in fixed deposit and wants to invest somewhere else. He wants to know what is the best possible way to invest 10 lakh rupees, which can be used to repay the loan amount in 5 to 10 years. So here somebody is doing a whole lot of planning over there. But I guess, Harsh, you can guide him a little more.
So I think basically he wants to invest this 10 lakhs and yet I think he wants to have access to that money should he need it. I think one of the best ways to do this is please take what is called an overdraft cum regular home loan. So, I mean, they are called various names by various banks. The more famous among them is the Max Gain scheme from State Bank of India. You have Home Saver, Home Credit, Smart Home from the foreign banks like Standard Chartered, HSBC or Citibank. IDBI Bank offers a similar product. Bank of Baroda offers a similar product. The key here is put this 10, you will be given a linked account along with your loan. In that linked account, you can put in this 10 lakhs. It will be treated as having been repaid, and your interest calculation on your home loan will be done on whatever is the loan amount minus this 10 lakhs. You can withdraw this money whenever you want. That, I think, is the beauty of that. And to the extent it remains deposited in the overdraft account, your interest will be lower. The day you withdraw it because you have to use it for something else, I think on that day the interest will revert back to whatever principal outstanding is there.
Right.
As
Harsh, I want to draw your attention back to the question. Now, Atul also says very clearly that he has cash that is worth 10 lakh rupees. Now, of course, one option that you gave him is the overdraft loan. But he also says that he wants to invest this cash, which he is holding in a fixed deposit right now, in an instrument by which he can actually repay the loan amount in 5 to 10 years.
And I think he did mention, he did mention that he wants a fresh loan, so which means he's planning to buy a fresh property.
Would you then actually advise him to create a different asset, probably invest in say stocks or something, invest in mutual funds, etc., where he will also get to increase that amount, increase the 10 lakh principal that he's working with, and use it to repay the loan amount?
So there are two ways in which he can do it. Part of this he can use to pay off his car loan, so that his loan eligibility, home loan eligibility increases.
Okay.
But definitely if he invests this on a systematic basis, not one time, he can shift this into some kind of a debt fund, and say over 3 years or 4 years or maybe even over 5 years, he shifts it in systematic installments into an equity fund, and then say holds it for another 5 years. I think that will give him a lump sum that will enable him to pay off the loan on the fresh loan that he is taking. That will enable him to pay it off much quicker. Of course, the equity investment comes with a certain amount of risk, but if you do it on a systematic basis, the benefit far outweighs the risks.
There you are, Atul. You've asked for some advice on home finance, and you're also getting financial planning advice over there. Makes sense to build one asset, build two assets in place of just trying to build one asset. So that is another option that you can consider. Of course, the option of the overdraft loan is always open to you. But yeah, do try and use part of the cash that you have in hand to pay off the car loan, because it's really not an asset that you're building over here. It's more of a liability, because the car does depreciate over time. Moving on, we have Sharad Sinha, who's called in from Jamshedpur. Sharad, tell us, how can we help you?
Yeah, actually I would like to know about the reverse mortgage, actually how it works.
Sorry, Sharad, could you repeat your question? There was a problem with the audio over there.
Yeah, reverse mortgage. I would like to know about reverse mortgage.
You want to know about reverse mortgage? Am I right?
How it works, actually. Yeah.
How it works.
How old are you?
47 years old.
Well, Mr. Sinha, I don't think you are eligible for a reverse mortgage. Reverse mortgage is meant for senior citizens who are staying in their own home, which is free from any liability. In that case, that senior citizen can use it to generate a pension for himself. The pension is generated in many ways. One way is that the bank gives a loan which is given over to an insurance company that gives the lifelong pension to the owner of the house. The other way is that the bank disburses monthly installments of loan. You continue to stay, the senior citizen continues to stay in the house till they are alive and after their death till their spouse is alive. Post that, the bank will give an option to the heirs to pay off the loan along with interest, in which case they can then take over the property. If the heirs are not willing to do that, the bank would sell off the property, repay its loan, and if there is any surplus, that will be made over to the heirs. If there is any deficit, they can't really recover it from anybody. That will be the bank's loss. But I think the starting point is that it is meant for only senior citizens.
Right. Harsh, also could you elaborate a bit on how the payout actually happens, on how the money that you get from the bank actually happens? Because we've got a lot of people calling in on Property Hotline and asking us if, they could take a reverse mortgage to fund their children's education, to actually fund their children's wedding, etc. A lot of them are looking at it as, a single payment, a one tranche payment that they can get to probably buy a new house, buy a smaller house for them to live in during retirement. Could you give us an example of how exactly the payout is done?
So I think if they are looking for a lump sum loan, then reverse mortgage is not really a good product for them. It is meant to give a pension. If they are looking for a lump sum loan, then it is best to take a loan against property. But for senior citizens, obviously they will not be able to get a loan against property. So they may have to have their children join in as borrowers. They can be co-borrowers and provide the property as a security. In fact, please remember, on the reverse mortgage, the interest rate is not very low. I mean, I think it is around 10.25%.
So it is on par with what we would be paying for a home loan. You can get it on
loan against property as well. So I think Mr. Sinha, who's asked this question, is only 47. If it is for himself that he is looking, you are much better advised to take a loan against property rather than a reverse mortgage loan.
So Sharad, you should ideally be looking at a loan against property. However, if it is for your parents and they are owners of a property, then yes, reverse mortgage is something that they could obviously look at. Just to run through the product quickly for all our viewers, reverse mortgage is essentially what it says. It is a reverse of a mortgage, a reverse of a home loan. Here, where in a home loan, you pay an EMI to eventually gain ownership of the home. Here what you do is transfer the ownership of the home to the bank, and the bank pays you an EMI for that. So it is a good option if you are a senior citizen, if you are living in your own property, the property does not have any loans on it, it is not under lien in that sense. And if that is the case, then you can actually mortgage your property to the bank and you can get a monthly income on it. Now, you cannot get a lump sum payment. There are no lump sum payments in reverse mortgage. That is something that you need to remember. Harsha, I can see that you want to come in.
You can get a lump sum payment. It is very low. I think the maximum is some 12.5 lakhs and it is only for certain purposes, etc. For all practical purposes, we can say that you cannot get a lump sum.
Right. The idea over here is that the bank and the government, when it actually came out with the reverse mortgage product, wanted to give some sort of security to the senior citizen, and that was the reason the reverse mortgage product was actually introduced in the market. And it really does just that. It gives you an income. It gives you a guaranteed income in your old age. Moving on, we have Suresh now, who's called in on our phone line. Suresh, how can we help you?
Madam, I'm speaking from Chennai.
Yes, Suresh.
What is the thing now? When we don't make any payment or we are skipping a payment, it reflects in the CIBIL.
Right.
When the payment is done by us, it is not coming in the CIBIL.
So essentially, you want to ensure that the payment that you made, the payment that you settled, reflects in your CIBIL, right?
They are not updating CIBIL. They are only putting who are not paying, they are immediately updating it. After the payment is done to the institution or a bank or whatever it is, they are not updating it for several years.
Right, that's a very good question.
Document and show.
Harsh, how can we update our CIBIL score now? Say we've missed a payment and say we've gone back to the bank and settled it after that. how do you ensure that it reflects on your CIBIL score?
Sureshji, have you actually taken out your own CIBIL report to see that it has not been updated? What is the basis of saying that the CIBIL has not been updated?
No, I am speaking for myself. Even my friends also have the same problem. When the amount is paid to the bank, it has not been updated. Every time we are going for another loan, we have to carry the document of the settled one before 2 years or 1 year, whatever it is, we have to carry it.
So I think there is a slight bit of a...
SPA, immediately it is coming after the 3 months.
Right, Suresh. Suresh, give Harsh the opportunity to answer your question. He'll tell you how you can set your CIBIL score right.
So,
go on, Harsh.
I think, Suresh, the first thing is, please get a copy of your own CIBIL report. You can get that. Currently, you have to pay money for it by going on CIBIL's website, and you can ask for it online. I think from January onwards, one report a year is going to be free. But right now, you can get your own CIBIL report. You will find that the payment has been updated. If the payment has not been updated by the end of the month, within 30 days from the end of the month in which you have made the payment, you can file a grievance with CIBIL. And believe me that it will get updated. The problem that you are facing of getting fresh loans is because what is updated in CIBIL reports is the fact that the payment has been made. It continues to show that you had delayed payments in the past. It also shows that you have now paid it with or without the full interest. Because both those things are appearing, you will continue to face problems in getting fresh loans. But over time, as the repayment has been done and the outstanding is no longer carried forward, maybe over 2 years or 3 years time, you will face less problems in getting a fresh loan. So I think the misnomer is that people feel that by settling the loan, from the next day onwards, I should be able to get fresh loans without any problems. That does not happen. If you have delayed payments in the past, you will continue to face problems in getting loans.
So Harsh, what you're saying is the CIBIL score will not instantly reflect the payment that has been done. So if you've actually settled your payments, the score will not reflect it, but the record will show that yes, you have settled the payment.
I think it will reflect both things. It will reflect the fact that you had delayed payments. It will reflect the fact that you had settled the payment fully or partially, whichever way. The score will improve when you pay. So there is a huge benefit by paying and settling. And over time, your score will improve over 2 years or so. So I think the conception that people have that once I settle, from next day onwards, I should be able to get a loan easily. That I don't think is possible.
So you have to wait for another 1 or 2 years till your CIBIL score actually resets itself and reflects the fact that you made your payment.
Absolutely.
Now, tell me this: a lot of people like Suresh also call in and say that they've made the payments, they have waited for some time, but still that does not reflect on the CIBIL score. Now, in that case, how can they get this redressed? Can they approach CIBIL? Can they write to them, show them some certificate? How do they go about it?
So there is a grievance tab on the CIBIL website. There is also an address to which you can write through regular physical mail.
Okay.
I think whatever is your grievance, if the payment that you have made is not reflected, within 30 days, as I said, within the end of the month, another 1 month after that also, if the repayment is not reflected, then you should complain, and that will be addressed if at all it happens. I think the problem is that your score doesn't improve immediately. I think that really is the big problem that people think, and that I think is a misunderstanding. Your score will not improve simply because you've just made the payment now. It will take time before it will improve.
Which is why, like we keep telling you on Magicbricks Now, you have to think twice before missing that payment, not just on your home loan or on your car loan or personal loan, but also on the credit card that you use, because all of it goes into your CIBIL records. And from what we hear soon, utility payments will also be part of your CIBIL records?
I don't think so, because that is not provided in the Act itself. So I would think that the Act would need to be amended. Changed. Or RBI would have to make a special dispensation for utility records to be included in CIBIL.
However, one thing that you do need to remember is if you've taken a loan of any kind, be it on your credit card, if you've used your credit card somewhere, or you've taken an education loan, a personal loan, a home loan, a car loan, all of this goes towards your CIBIL score. So you need to ensure that your repayment is in place, which will also help you get a better deal on your home loan when you do go out seeking one. We have another caller from Chennai now. Sai has called in. How can we help you?
Hi, my query is simple. I have bought a house and I have paid about 80% of the amount by myself without a home loan.
Okay.
Now I might need some, and the project is being delivered next March, and I might need some cash for interiors and stuff like that. Now the banks have come back offering me, I approached them for the balance 20-30 lakhs, which I have to pay, for which the banks offered me more than, the amount that I want in case I want. So what I want to check is it better to go for a home loan and then use that money for my interiors and stuff like that, or it is better to, pay up as much as possible now from my end and then go for a personal loan for my interiors and stuff like that?
That's a very different sort of question. Sai has a problem of plenty over here. What should he do, Harsh?
So it's a very simple thing, Sai. I mean, as you will find out from the market, if you're going to take a personal loan, that's going to be far more expensive than a home loan. A home loan typically will be between 9.3 to 9.4%. A personal loan, even if you are working for a top grade company, will not be less than 11-12%. And it could go as high as 17, 18, 19%. That really depends on the type of employer that you are working for. So one, the personal loan will be more expensive. Two, when you take a loan to purchase a house, then it is tax deductible, and that makes it even cheaper. The rate is lower to start with, and because it is tax deductible, the rate becomes even lower. Therefore, it makes huge sense for you to take whatever extra money you need as a home loan and free up the money that you have already invested. That money you can use for interiors because there the deduction is very, very doubtful.
Right. Also, tell us this, Harsh, a lot of banks and a lot of home finance companies also offer you a home improvement loan or a top-up loan alongside your home loan.
Right.
Does it make sense to actually go for these kind of products?
It really depends, because if you need that loan, obviously, so it depends on your purpose. I think if you are asking about a tax deduction, typically tax deduction is available if you have taken a loan to acquire or construct a property, or you have incurred if you have taken the loan to pay for the repair or renewal of the property. So if the home improvement loan is used for repairing the property, something like say civil works, etc., maybe even painting, I would even call painting as a renewal of the property, then the loan taken for that purpose would be tax deductible up to the limits if it is a self-occupied property. Otherwise, it will not be taxed. So if you are making furniture, I don't think it will be tax deductible.
So money spent on repair or renewal, if you've taken a loan to finance it, that is tax deductible, but you need to ensure that this is for property that you occupy, that property that you live in. You cannot use it in property that you plan to lease out or rent out. The other thing, of course, is that it only covers repairs. It does not cover furniture. So that is an important thing that you need to keep in mind. We have a caller from Visakhapatnam now. M. Subahan has called in. How can we help you, Mr. Subahan?
Hello.
Yes, Mr. Subahan.
Hello, sir. Just I want to know, for contract workers, what is the facility for giving loan for home finance?
I mean, what kind of contract are we talking about, Mr. Subahan? I mean, how long?
The payment is very less to the contract workers, and the payment is very less, and he cannot give reply. He cannot repay the amount if it is a cost of 55 lakhs, and that is why just I want to know that for contract workers, what type of home finance you are giving?
What is the kind of contract work that the person does?
Contract work, security guard working.
Okay.
Working as security guard, the payment is around 10,000.
Mm-hmm. Right. So I think Harsh, he's like he says, 10,000 rupees is a salary. 65. I'm guessing he's looking at a loan of around 65 lakhs. Can he get a loan? Is he eligible for a home loan of 65 lakh rupees in the first place?
That's obviously not going to be possible. I mean, typically, at best, you would get a loan of 4.5 times your net annual salary.
Which would work out to around
about 5 lakhs,
5 lakhs
in this 5 to 6 lakhs in this particular case. So clearly, you can't get a 65 lakh loan.
No, but what are the rules for contract workers? Are they taken as self-employed professionals?
So
on par
I
with
think in a broader sense, if the contract worker has consistently been getting the money, he will effectively be treated like a salaried person. You just have to show the track record that, I have been employed on contract year after year, and this is the kind of money I have made year after year. Maybe the rate might be a little higher because you might be treated as a self-employed person. Sometimes if it is hugely consistent and the amounts are reasonable, I don't think that even that premium will be there. You will get it at exactly the same rate as what a salaried person would get. Quantum, of course, will always depend on the amount of income that you consistently get.
So, Subhahan, essentially the problem here doesn't seem to be the fact that the person you're talking of is working on contract. The problem here is largely to do with the income. So, you are given your loan eligibility depends on what is your income, what is your take-home pay. And like Harsh just pointed out, it would be around 4 to 5.5 times your the gross pay that you take home, the amount of money that you actually take home on an annual basis. So that's how you calculate your loan eligibility, and that seems to be the problem here. So yes, if the person is goes and applies for a lower loan amount, say around 4 or 5 lakh rupees, there seems to be no problem why he should not get a home loan. However, a 65 lakh rupee loan is a huge amount, and that is probably the reason why the loan is being rejected in this case. Before we move on, Harsh, one quick question to you. A lot of the youth today choose to work on contract. A lot of them are in fact working freelance. They are working from home. They're not really associated with a company in that sense. How do home loans work for them? How do banks view them? Now, they are earning a lot, but they may not be earning on a monthly basis. So would they be on par with, say, a businessman or a self-employed professional like a doctor or a lawyer? Or would they be classified as a salaried individual?
So clearly, if you don't have a consistent income, so there are two kinds of people who work on contract. One is somebody who makes consistent amounts of money, but instead of being in employment, he just chooses to be on contract, or the employer chooses to keep him on contract. There, if the consistency has been there for quite some time, he will be treated exactly like an employee. But where they are genuinely self-employed, obviously they will be treated like a self-employed if they are professional. So for example, a chartered accountant practicing may not have regular monthly income. He will have lumpy flows. He will be treated like a self-employed professional with very specific schemes, rates and eligibilities that are applicable to them.
So, that's a big myth over there that a lot of people hold on to, that you need a salary to be able to take a home loan. You do not require a salary. What you need to show is a monthly income. And that too, like Harsh just pointed out, if you are a professional who gets lumpy income, that is a huge amount of money in certain months of the year and lesser amounts of money in certain times of the year, even then you would be eligible for a home loan. The bank, of course, has its own ways of calculating what would be a loan eligibility, but that does not rule you out from getting a home loan. With that, it's a wrap on this edition of Property Hotline. Harsh Roongta, thank you very much for coming and answering all those questions. Stay tuned to Magicbricks Now and do send in any questions if you have them. Our IDs are flashing on the screen over there. We will, of course, get your questions answered by the foremost experts in the country. Thank you very much for watching the show. Stay tuned to Magicbricks Now.
You can watch live TV on our website mpnow.in. Find us on Facebook at facebook.com/Magicbricks Now. And don't forget to click the like button. You can also follow us on Twitter at Magicbricks Now. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/Magicbricks Now.